The US Securities and Exchange Commission, or SEC, shook the crypto world in 2020. They filed a lawsuit against Ripple Labs. At the heart of the case, XRP, the company's digital currency. The SEC claims XRP is an unregistered security. Ripple, however, argues that XRP operates more like a commodity. This case has massive implications. A win for Ripple could reshape how cryptocurrencies are regulated in the US. This case has dragged on for years, but a decision could be coming soon, and the entire crypto world is watching. Why? Because the outcome could set a precedent for other digital currencies. It could determine whether they fall under the SEC's jurisdiction or operate more freely. The stakes are incredibly high, not just for Ripple, but for the entire cryptocurrency industry. A victory for the SEC could give the agency broad authority over the crypto market. This could stifle innovation and slow the growth of this emerging sector. On the other hand, a win for Ripple could pave the way for a more open and innovative crypto ecosystem in the US. One where new projects can flourish without the fear of being slapped with a lawsuit. The Ripple case truly is a watershed moment. While the Ripple case simmers, another development is shaking up the crypto world: exchange-traded funds, or ETFs. Think of them like baskets of assets you can buy and sell on the stock market. Well, now there's a push to create ETFs filled with cryptocurrencies. This would make it much easier for everyday investors to get in on the crypto action. Recently, Nasdaq filed an application to list a CoinShares ETF for Litecoin. This follows a wave of similar filings from industry giants like Grayscale, Bitwise, and WisdomTree. These firms see a huge potential market for crypto ETFs. They believe these investment vehicles could open the floodgates for institutional and retail investors alike. The SEC, however, remains cautious. They've yet to approve a spot Bitcoin ETF, citing concerns about market manipulation and investor protection, but the pressure is mounting. The crypto industry argues that ETFs offer a regulated and transparent way to invest in digital assets. The approval of a crypto ETF would be a major victory for the industry. It would signal a growing acceptance of cryptocurrencies by mainstream financial institutions, and it could lead to a surge in investment. The SEC is understandably hesitant, but the momentum seems to be shifting towards eventual approval. The Commodity Futures Trading Commission, or CFTC, threw a curveball into the Ripple case. They declared XRP a commodity. This directly contradicts the SEC's stance that XRP is a security. Talk about a regulatory headache. This disagreement between two powerful agencies highlights the confusion surrounding cryptocurrency classification. The CFTC's decision carries weight. It lends credence to Ripple's argument that XRP is not a security subject to the SEC's oversight. This could potentially weaken the SEC's case against Ripple. It also underscores the need for clearer regulatory guidelines. The current situation, with different agencies applying different labels, creates uncertainty for businesses and investors. It stifles innovation and hinders the growth of the crypto market. What the industry desperately needs is a unified approach. A clear framework where regulators agree on the classification of different cryptocurrencies is crucial. This would provide much-needed clarity and allow the industry to develop within a predictable regulatory environment. Binance.US, a branch of the global cryptocurrency exchange Binance, recently hit pause on its legal battle with the SEC. This came after Gary Gensler stepped down as SEC chair and Mark Yue became the acting chair. The timing has raised eyebrows, leaving many to wonder if this signals a potential shift in the SEC's approach to crypto enforcement. This pause could be temporary, a chance for both sides to regroup and possibly negotiate a settlement. But it also begs the question, will other crypto companies facing SEC scrutiny like Coinbase and Kraken follow suit, and will this lead to a more conciliatory approach from the SEC under new leadership? The crypto industry has long accused the SEC of regulation by enforcement, arguing that the agency's aggressive tactics stifle innovation. Could this pause in litigation be a sign that the SEC is open to a more collaborative approach? Only time will tell. But this development is being closely watched by the entire crypto industry, hoping it might signal a thaw in the icy relationship between regulators and crypto businesses. Section 5, Capitol Hill takes on crypto. The halls of Congress are buzzing with talk of cryptocurrency regulation. And for once, it's not just about banning it. Lawmakers on both sides of the aisle are realizing they need to provide some clarity. The current patchwork of state-level regulations is confusing and stifles innovation. Ripple, for example, is actively lobbying for a bill that would create a clear regulatory framework for cryptocurrencies. This shows a shift towards proactive engagement with policymakers, aiming to shape the rules rather than fight them after the fact. This bipartisan effort is being spearheaded by figures like Senator David Sachs. They recognize the transformative potential of blockchain technology and want to ensure the US remains a leader in this space. The goal is to establish a regulatory framework that protects investors and fosters innovation. This involves clarifying which agency oversees different types of crypto assets, defining key terms like security and commodity in the context of crypto, and creating a pathway for crypto businesses to operate legally within the US. Section 6. The White House weighs in. Even the White House is getting in on the crypto conversation. The Biden administration has signaled its support for responsible crypto asset use and the development of blockchain technology. They recognize the potential of this technology to revolutionize various sectors, from finance to supply chain management. This support from the executive branch is crucial. It indicates a growing acceptance of cryptocurrencies at the highest levels of government. The White House understands that blockchain technology is here to stay, and they want to ensure the US remains competitive in this rapidly evolving landscape. Their focus is on fostering innovation while mitigating risks. This involves working with Congress to develop a comprehensive regulatory framework, addressing issues like consumer protection, money laundering, and national security. The White House's stance is a positive sign for the crypto industry. It suggests that the US government is moving towards a more balanced and informed approach to cryptocurrency regulation, one that fosters innovation while addressing legitimate concerns. Section 7. Categorizing the crypto chaos. One of the biggest challenges in regulating crypto is figuring out what the heck these digital assets actually are. Are they currencies, securities, commodities, NFTs? The lines are often blurry, and the current regulatory framework doesn't offer clear answers. The proposed legislation aims to address this by establishing a clear taxonomy for crypto assets. It seeks to categorize different types of cryptocurrencies based on their features and use cases. This would involve determining which agency, whether it's the SEC or the CFTC, has regulatory authority over each category. This categorization is crucial for providing regulatory clarity. It would allow businesses to develop and launch new crypto projects with a better understanding of the rules they need to follow. It would also make it easier for investors to understand the risks and potential rewards of different crypto assets. Ultimately, a clear and consistent classification system is essential for fostering innovation and building a healthy crypto ecosystem. Section 8, Stablecoins, the regulatory litmus test. Stablecoins, cryptocurrencies pegged to the value of a stable asset like the US dollar, are emerging as a key focus area for regulators. Their growing popularity, particularly in payments and remittances, has raised concerns about financial stability and consumer protection. Some lawmakers believe stablecoins could pose a systemic risk to the financial system if not properly regulated. Others see them as a valuable tool for financial innovation, especially in providing financial services to the unbanked. The debate over stablecoin regulation is likely to be a heated one. How regulators choose to oversee stablecoins could have significant implications for the broader crypto market. If stablecoins face strict regulations, it could set a precedent for stricter oversight of other cryptocurrencies. On the other hand, a more balanced approach that fosters innovation while addressing risks could pave the way for a more permissive regulatory environment for the entire crypto industry. Section 9, the future of crypto in the balance. The US stands at a crossroads with cryptocurrency regulation. The outcome of the Ripple case, the approval of ETFs, and the push for new legislation will shape the future of this burgeoning industry. The decisions made today will determine whether the US fosters innovation or stifles it. One thing is clear: cryptocurrencies are here to stay. They represent a fundamental shift in how we think about money and finance. The question is, will the US embrace this change and establish itself as a leader in the global crypto landscape? The answer depends on finding the right balance. Regulation is necessary to protect investors and prevent illicit activities, but it shouldn't come at the expense of innovation. The US has a unique opportunity to set a global standard for responsible crypto regulation, one that fosters innovation while addressing legitimate concerns. The stakes are high and the world is watching.